Hello and welcome, dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is August 31 and we're starting from euro-dollar pair with Jakub Novak as usual. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0895 on Wednesday afternoon, coinciding with the rise of the MACD indicator line from zero, prompted a buy signal that led to a price increase of over 45 pips. Selling on a rebound from 1.0940, meanwhile, resulted in a 20-pip decline. Euro rose after the release of the Eurozone's Consumer Confidence Report and Germany's Consumer Price Index, but a stronger surge occurred amid the ADP data on the US labor market, which disappointed as it turned out rather worse than forecasts. For long positions, buy euro when the quote hits 1.0926 and take profit at the price of 1.0959. Growth may occur today as a continuation of a new trend, especially if price pressure persists. However, when buying, ensure that the MACD line lies above zero, or it's just starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0899, but the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.0926 and 1.0959. For short positions, sell euro when the quote reaches 1.0899 and take profit at the price of 1.0966. Pressure will increase in the event of a decrease in inflation in the Eurozone. However, when selling, traders must ensure that the MACD line lies below zero or drops down from it. Euro can also be sold after two consecutive price tests of 1.0926, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0899 and 1.0866. Pivot points as a lifestyle. Here's GBP USD currency pair. Evangelos Paulakis is helping us. Yesterday, bullish players managed to rise and test the strength of the lower border of the daily cloud, 1.2724. Currently, the cloud contains numerous resistance. Thus, breaking through and surpassing the daily cloud will allow bullish players to achieve several objectives at once. Eliminate the daily death cross, 1.2771 and 1.2823. Take over the weekly short-term trend, 1.2844, and enter the monthly Ichimoku cloud, 1.2893. However, if the bullish scenario fails and the market sentiment later changes, the rival, as before, needs to move beyond the support levels of 1.2629, 1.2597. and test the strength of the 1.2471. Currently, on the lower timeframes, the main advantage belongs to bullish players. They have entered the bullish zone concerning the H4 cloud and have set a bullish target. Thus, if the rise continues within the day, the H4 target 1.2836-2864 will turn bullish indicators in the form of resistance from classic pivot points 1.2769, 2820, and 2896. However, if the market falls below the key levels of lower timeframes, which today are at 1.2693 central pivot point and 1.2626 weekly long-term trend, we can expect the balance of power to shift towards strengthening bearish sentiments. Here's forecast for USD JPY currency pair. This trading plan is presented by Petar Yakimovic. USD JPY has been trading sideways at the price of 145.80. But Petar sees potential for the further downside movement towards lower references. Due to the false breakout of the resistance in the background and the lower highs in the last few days, Petar sees potential for the further drop towards lower reference. Downside objective is set at the price of 144.65. MACD oscillator is showing fresh downside momentum, which is a good sign for the further growth. Intraday resistance is set at the price of 146.05. Here's Laurie Bailey with AUD-USD pair focused. Let's have a look. Yesterday, the Australian dollar couldn't hold above 0.6493 and even failed to close the day with wild candle, unlike other currencies. However, this morning AUD-USD is leading gains as it aims for the target level of 0.6570. Technically, the Marlin oscillator breaking into the uptrend territory is assisting this move. From a fundamental perspective, today's reports on industrial investment and construction are playing a role. China's official manufacturing PMI rose to 49.7 in August from 49.3 in July. On the 4-hour chart, the price is trying to stay above 0.6493 level. The Marlin oscillator is rising in the positive territory. An uptrend as we wait for the price at the nearest resistance level. The 0.6570 level is strong since the MACD line has already reached it on the daily chart. Gold, sweet gold. We got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Early in the European session, gold is trading around 1945, consolidating around this area, having reached a high of 1948 yesterday in the American session. Macroeconomic data from the United States was negative for the US dollar, which weakened Treasury yield bonds and, in turn, was seen as an opportunity to buy gold as a safe haven asset. Investors are waiting for the non-farm payrolls data to be released on Friday. Meanwhile, we expect gold to consolidate below 5.8 Muri level and above 4.8 Muri in the coming hours. We expect range trading, which could be seen as an opportunity to sell below 1947 and 1953 and buy above 1937 for 8 Muri level. According to the 1-hour chart, we can see that gold is moving within an uptrend channel formed since August 24. We could expect that it will continue to rise in the next few hours and could reach the top of the uptrend channel around 1953. If gold reaches the resistance zone of 1950 to 1953, this could be seen as an opportunity to sell, since the Eagle indicator is in an overbought condition. From that resistance level, we could sell with a target at 1923. On the other hand, we expect a technical correction of gold in the next few hours. In case gold breaks and trades below the 21 SMA, located at 1943, we could expect a bearish correction and the price could reach 4.8 Muri level at 1937. If bearish pressure prevails, we could see a fall until the price reaches the 200 EMA, located at 1920. Given that gold is technically in an overbought zone, we can see a consolidation and we could expect a technical correction to occur. Therefore, as long as the metal is trading below 1953, it will be seen as a clear signal to sell with a target at 1920. What about cross-currency pairs? Here's pound sterling and Australian dollar. Arif Mokmar describes. If we look at the daily chart of GBP AUD cross, it is clear that GBP AUD is still in a bullish condition, which can be seen in this CCI indicator, which is still moving in the range of level 0 to level 100. While the movement of GBP AUD is being held at the bullish order block level is 1.9486. So that in the next few days, as long as there is no downward correction past 1.9327 level, GBP AUD will try to test the level above its current price, namely the 1.9966 level. And we continue with crosses. CAD-JPY currency pair. Ralph Shedler describes. The CAD-JPY pair is trading at 107.70 at the time of writing. As you can see on the H1 chart, the rate increased with an ascending channel. Still, it's failure to reach the channel upside line again. And 108.15 historical level signaled exhausted buyers. Staying near the uptrend line indicates a breakdown and a potential new downwards movement. The former low of 107.61 represents a downside obstacle. Dropping below 107.61 obstacle activates more declines. This is seen as a selling opportunity. That's all for today. See you online soon and good luck.